All right, guys, let's go for this. I won't be long. I've been off the live for such a long time. I've been really busy, but uh, there's a lot I've been doing. But I'm back onto normal trading now. I just released the third version of my algorithm now, performing pretty well. All right, guys. So now, obviously, because I ain't done it for so long, you can probably hear me twice. All right, now let's crack on and get things going. So let's do this. All right, so for now, let's go over and have a look. So the dollar index at the moment has done this movement here. So we've got the dollar index breaking above this high. Now, the last time I spoke to you guys, we were looking to see what happens when the price gets to this high. And we had a few days of the price kind of bouncing above this high. If there was a reversal that was supposed to happen, then the key thing would have been that this supply order block, the price would have closed beneath it. But what we've had, in fact, is that we had an A swing. Now, this is kind of like an inverted structure of how price moves in a trend. So if I use basic theory here, so this is the A swing, up here is the B swing. Now, as long as the body of the candle doesn't close beneath the A swing, because in normal market harmonics, if the price closes beneath the A, then that means that the trend has changed direction, which is not true. Okay, the only way the price will change direction is if the body of the candle closes beneath C. Since we have a wick close and not a body close, the price is still bullish. And the reason for that is very simple. Liquidity, or that flows in the market, the people who control the direction of the market, whether you like it, want to believe it or not, or don't believe it's true, their liquidity is inside of the body of the candle. So if there's a market structure break here, even if the price didn't close out of this order block, but just the body of the candle closed beneath A, it's highly likely the price was going to make its way the other way down for a short, but it didn't do that. So that lets us know that the price is on its way for a very strong move of liquidity. Now, the other side of the story is that the liquidity gap that was between this range here of 69 to about 73, 103, has been filled out right now. Now, the market has opened this already with a slight reversal, nothing too heavy. The price is still pretty bearish bullish to me. I don't really get any bearish tones in the market. So that means that most likely the dollar index is going to continue rising. Now, I told you because of inflation, the dollar index is going to do its last attempt to save itself before its unfortunate demise. For that to happen, we need the dollar index to be going towards the 120s. Now, I've always spoken about these highs over here. And of course, as the dollar's last attempt to protect themselves, they're going to have some heavy quantitative tapering going on. And looking at the price structure from the daily time frame already, it looks pretty clear that the price is trying to achieve something of that sort. So now that you have this structure in mind, let's look at where we're going. Now, the reason why I look at the dollar index, for those of you who never watched me before, for one reason and one reason only, the dollar index helps us to, I call it intra-market analysis, which is to look at multiple different markets to derive an answer of the direction you're going for, or to increase your analysis accuracy. Now, before I usually do the dollar index first. It's not the dollar index pairs or dollar related pairs, not the only thing I trade, but I like to look at them as a starting point. Now, because the direction is, even though the direction is bullish, if we look at individually at where we are right now, all right, I'm going to be watching the high of this day over here. And also I want to be watching, now it looks as though we've made relative equal highs with this high right here. We just about have a touch above it, but there's another high not too far away. If the price manages to achieve that high, then I'm expecting the next play, the price to go, we'll be back up here at 104, just before 105. Now, at the moment, okay, the price doesn't actually even have to come back down here. We're quite heavily bullish, and there's a supply zone to the left over here. Now, at the moment, let's zoom in to take a look at this. At the moment, this supply zone over here, I can take these lines off. We don't need it. At the moment, as the market is open, we've had a close above this supply order block, and the market is kind of opened with a return inside. Now, the way for us to know what to do for today is if today the daily candle closes beneath this supply order block here, which at the moment is a flip zone, so it can be used as a demand zone. If the price doesn't close beneath here, then we can actually look for a continuation long into tomorrow. Now, the market's already gapped down at open, so there's going to be an obvious long that needs to happen. How it's going to happen, though, it's up for debate right now. But if we have a body close beneath this order block here, then we should expect another day of selling, maybe down to here, or even back down to the order block. We'll see. And then we can begin to look for another long position. But for now, my bias is still bullish on this market for now. As you can see, as the market is open from Asia into London into the US session, the candles here on the H4 are increasingly getting smaller towards the bearish side, which means there isn't that much bearish pressure in this market here. All right. Now that having that in mind, I'm going to just be watching to see how the price behaves. And if you scroll down to the M15, there is this liquidity gap too by this validation point, or some of you call it FVG maybe. And there's a gap here. So on the M15 here, there's a supply zone to the left that we can use as a demand zone because the price has broken above it. And maybe we can look for the price to fill out this gap and then return to go for a long. So this is a second alternative if the price does close beneath this area. If it leaves this gap up here and continues going, then I'll just be looking for price really to reach back down into this area and then start launching off for a long again. All right, this is using the M15. So if the price follows suit with that, let's see what we have on major pairs so that we can work with that. Now, what I'm going to do, Euro USD. All right, let's go to Euro USD first. Now, looking at the general structure of currency pairs that are paired against the dollar, so the dollar's the default currency, most of them are giving obvious bearish signs. With USD JPY and USD CAD, there's obvious bullish signs going on. All right, so it's very clear that the price definitely wants to continue. Now, I was in USD CAD. Unfortunately, I had to put my stops to break even because of the NFPs, and the market took the opportunity to stop me out in a bit of profit and then take off and do the move, which I found so annoying. But at the same time, I will never regret because it's safer to have your stop losses to break even than to put it at your normal stop loss during something like NFPs. Because if there's not enough liquidity to get you out at your position, then you could lose more than your stop loss and it can be unlimited. And we never know what's going to happen with the NFP. So it's better to be safe than sorry. So that's a loss that I'm happy to take because I follow the rules that you're supposed to follow when it comes to risk management and trade management. So now that we've got that anyway, let's go over to the D1 H4. Let's have a look and see what we've got going on. USD CHF, NZD USD. Now NZD USD H4, H1. Let's have a look at this. Now, a couple of the pairs have kind of done similar things. Now, NZD USD is interesting to me. I'll pull up this one first. The price took the high. Now, this is Friday that we're looking at. So in the Asian session, you can see that the price took the swing high of the day, which was also created in the previous Asian session over here. And the price gave us this initial short. Then we see the price take off even higher during the US session, and it came for the US session high. So you can see that highs are matching each other as reference points. So if you don't believe there's an algorithm in the market, I mean, just this kind of structure here should let you know everything you need to know. Asian high took the previous Asian high, US high took the previous US high. You can't make it up. But anyway, after this higher high right here, you can see we have a very strong short that allowed us to have market structure break to the left. Now that the price has done this, I'm actually looking for the price to return one more time here to make a lower high, but that will give us a short. Now, NZD USD, I believe this was New Zealand dollar news or something. We have a liquidity gap here that needs to be filled out pretty soon. Now, the trigger for this can be a few things. Now, I went through this with my academy students today. Now, on certain brokers, the price feed looks different. Now, on the IC Markets price feed for this open here, the open of this candle of the new day or the new week opens beneath the low. On Hugo's way, it doesn't, which is quite a big difference in meaning. But either way, my main focus would be on this low right here. Beneath this low, there'll definitely be sell stop liquidity. And those people who were sold off from Friday, the market participants from Friday, if there's enough sell stop liquidity, they can offload their sell positions over here. And that would push the price to decide to reverse. And then from there, we could look for a long. So I'm actually looking for the price to take this low first. Now, where would the liquidity be? Well, easy one is if I use the 30-minute to do this, there's a supply zone right to the left over here. that the price wicked into over here and produced this first movement here. And the second time it came nearby, the wick of this low, or the low of this wick, I should say, didn't return here. So a return in here, there should still be some liquidity available to push the price along. And if it does do something like that, then I would expect the price to come back into supply. Now, to be specific, it should be this supply order block here. So if this as a trade happens, then what we're looking for is entry here, either stop loss above the high or above the previous wick high, which is about 9.4 pips. And the target would be back down to this area, which is about 100 pips down. And if possible, even maybe the low. Now, these lows over here, when we go to the H4, they look very close to equal when you zoom out, but they're not. They're relative equal lows. But we have two weekly lows that are next to each other. So to me, this makes a lot of sense for the price to really just reach down beneath here. So if the price does that, that's 114 pips for 9.6 pips reward, or 9.6 pips as a stop loss. So that's 1 to 11. So if this actually happens, I'm actually going to set an alarm here already. If that does happen as I'm expecting, I'll be looking to take it. Now, if the price takes the low, I wouldn't mind taking the chance to go for a long. Now, the H1 version of what I was saying on the M30 is this. This is the H1 version. And if we kind of put the two zones together, so this is the H1 in blue. Let's take another color here to just kind of have like a cross section of between the two of them. So if I take a cross section and put this on top, something like this, we get this kind of purplish color. So really the M30 to H1 range is really between this area here. So if the price comes here and takes the low of this day, which has some sell stop liquidity, then we could ride the trade for a long. So we could have a stop loss of 7 pips even, which gives us a little bit of room. And then have a target up here of 71 pips, which is a 1 to 10. So we can have 1 to 10 on the way up, and then another 1 to 11 on the way down. So that could be 1 to 21 or 2 to 21, because you're risking 1% each time to get this. So I'm going to watch out to see what happens. I don't think anything's really going to happen on a Monday like this. At the moment, the price is basically ranging, which is good, because if it's in a range of accumulation, we can get that spike and the price can take off. Now, I believe there's Australian dollar news this week as well. If I put the news, we'll be able to check this out. Yep. So now Australian dollar news usually and always affects the New Zealand dollar news. Let me not even be give tautology. It always affects the New Zealand dollar news. They have a very close relationship. So I do expect NZD-USD to react in some way to whatever news comes out with the Royal Bank of Australia's interest rate decision. Now, it looks like across the board, on a side note, most central banks are looking to keep the rates the same, but we'll know very soon if there's going to be a surprise rate hike or they're going to keep things the same. But at the moment, anyway, this is really what the setup is. Now, this is at 5:30 in the morning. So if NZD-USD is going to do any kind of spike down and then go long, it will be around this time. Okay. So coming back to our charts anyway, this is what I have for NZD-USD. Now, I prefer to just, instead of just going through every single pair, unless someone's on the live and you have a pair that you want to look at, ideally, what you're going to do is just really go for the setups that you think are best for you, really. So, I mean, if there's no questions about pairs, I usually just give out the setups. And obviously, as this channel is going to grow and everything like that, I know that you guys can pick your pairs that you want. All right. All right, you can pick the pairs that you want. So ideally, let me do this. So if we pull up the second setup that I've got going on now, Pound USD was a pretty good setup as well. The price actually took this low here and we had an extensively long market structure break. The price broke several structures all the way even back up to a swing high up here. This is as high as this market structure break happened. If we look at the long side of things here, and then what we've had is that the price has come all the way back to this order block. So if you're wondering why, as the market's open for in a session outside of the pound's normal session, which is the Asia session, we're still getting long action, is because the price closed inside of an order block here and it opened inside of the same area. So naturally, price is going to start pushing long anyway. All right. Now, showing equal lows here, which most likely the price will definitely want to break beneath here. But looking at this movement, I'm still watching to see how far pound USD gets here. And that's why the dollar index is important. So if the dollar index is actually going to close outside of this supply zone, so let's come back. If the dollar index closes outside of this supply zone today, then that means we should be looking for some further bearish action on the dollar index for now, which will mean things like pound USD, NZD USD should go long, which from the framework of things would make sense because they have gaps to fill and then they can start to proceed further for a short. All right, now the other pair that I'm looking at, interested in, I have AUD USD, but I'll go for the other one as I'm interested in USD JPY. All right, now USD JPY has done a quite a bad boy movement that I really like. And I do expect most Japanese yen pairs to continue going long. But what I want to do is if I do it like this on the H4 and then on the H1, there you go. Then what you're going to do is if we look at the price, so this was the NFP movement here. So because I'm on the H1, I'll just hover over here. So in this candle, which says 3 o'clock, which is 1 o'clock, the NFPs in the UK time is 1:30. So it's inside of this candle. If I go to the 30-minute, then this is the exact moment the NFPs happen right here. So this is the NFP moment right here. Price spike down and we see the price gap up and do quite a few pips in a very short space of time. I think in that day, it did most of the pips. So if we take it from the low right here, it did 182 pips, which is absolutely amazing for the day. All right. So we get this Judas swing, price takes the low, and then we take off. Now, so we've had multiple market structure break, and it's very clear that the price wants to continue. As in today, price opened beneath the low and broke above and made sure it returned to that reference point. Cool. There's only one high left to the left before the price is going to be going back to this gap here in this supply zone. So my thing is, I really do like USD JPY, and I do think there's room for it to go for a short. I want to see what happens when it gets here. If it continues going long, then there's nothing we can do about it. But if you do get an opportunity for a short, which will be a return here, I'll be looking for the price to return back here one more time. Now, maybe not as deep as this, but give us a return that we can see that gap getting filled and have a long continuation. Now, looking at the trend of USD JPY and the way that the US dollar index is increasing in strength, if the dollar index continues on the trajectory that it's on, then it means that USD JPY is definitely going to be trending long for a while. Okay, now on the M30, there's a nice little order block here. If we were to use the last candle before the price changed direction here, we have a little gap here and then the price returning here. If the price was to do this, especially if it was like a induction to do it for a short, that would be such a brilliant counter trend move to grab. And of course, for that to happen, the dollar index doesn't even have to be bearish because sometimes Japanese yen pairs have a mind of their own. All right. But at the moment, even though the price is going long, you can see that the reaction is pretty weak apart from this break here. So I just want to see how the price is going to fare out here. But if USD JPY gives us this will be such a brilliant trade to take. Now, on the other side of the story here, since USD JPY is really pushing long, the next real targets that the price has to go to will be above this high, which I'm not surprised if it does. And once it gets there, you can already see from this trend that we're going to have one hell of a long come out on USD JPY. Literally from where the price is right now, that is already 600 pips basically to the high of the previous year. And I'm not surprised if the USD JPY touches that. So all I'm looking for really is that last pullback on USD JPY. And then after we're going to rise for a long. That's my expectation. So this is the second setup that I have. Now there are others, and obviously by tradition, I like to go through gold in the US 30. So before I leave you guys, I'll quickly analyze the rest. Now gold has been pretty nice. It's gone long, both long and short today. It had this very nice spike where it took the lows over here. But I still expect gold to continue going short soon. Now gold is playing a very nice game, the game of hard to get. There's an obvious liquidity gap that needs to be filled. And I know that sooner or later, it's actually going to do it. At the moment, though, where the price is, let's just look at body closes. So on the weekly time frame, we had a very strong close above the previous. Last week closed above the previous week's high pretty strongly, right? And now where the price is, that this wick over here, now, unfortunately, this wick just missed this supply order block section here. If you got in here, I would have taken it already. And the thing is that there is a chance that, you know, these two candles can represent supply as well. And if it does, then you can consider this whole area into supply. But for this time frame, it would be better to use that small area. Now, coming down to the daily to explain my point a little bit more. As the market's opened up here, let's take a look at what is actually done. So if I draw the D1 supply order block here, is this. Right over here, unfortunately, we have a break outside of this zone. The bright body of the candle closed outside of here. Now it's come back down into this area. So since it's broken above this supply zone can become a demand zone and actually do this and start to rally further. Now, for me, being the case that is pretty much a high probability case to continue, what we need to do is actually take our reference from this point here. So if I'm using a reference point here, let's take a look at what we've had. So gold gave us a reaction where it took the high of the previous month. All right. As a result of that, all of this bearish action we see is just breaks of market structure, the lowest down being over here. So we have market structure break all the way until this point. And so what the price really needs to do now is to find this footing. So I'm going to do two things. First thing, if I draw the supply order block in range that we can operate from, which is this whole area here. Now let's change the color to blue so that it's here. We have this. Now, if I use the Fibonacci tool, the adjusted one for institutional price action, then at the moment, you can see exactly why I think we should still get along. And if you can't see it, it's okay. You're learning. Over time, you'll understand. Now, what we have here, on the left, we have a supply order block, price went short. As the price closed above here, there's an equilibrium point right over here, which is where the market opened to. So right now, gold is just above equilibrium, so it's in discount pricing. If it comes back to this equilibrium point, since it's broken here, this is a great signature for a long continuation. And my targets would be that the price at least should come back into the optimal trade entry range before going short. So for me, gold has one more kind of step long before it starts to crash down for a short. Providing that, now I had another analysis here, which is when we trace the order blocks all the way here, there's still missing price action that should have happened from this high until $2007. Okay, but since the price may not reach there and is in fact using another area, so what it's hinging on is if you see this demand order block here that produced this massive move, which is how the price took the high of the previous year, 2022, it's become a very key and important flip zone order block. So I'm just going to draw in red here. This is a flip zone order block here, and this is where price is operating from at the moment. So if the price so chooses to stay in this manner, then really I'm looking for a gold buy and not a gold sell, even though the price should be going short soon. Because we're at equilibrium here and the price is going to come back to it, whenever time the price gets to the fair market value price, which is equilibrium, all right, there's going to be some sort of reaction. Either the price is going to be pushed into discount or into a premium. But because of this reaction we've had here, I'm suspicious that the price will probably go into a premium or discount one more time and then push along. We have a H4 order block over here, which is what I would call an equilibrium order block right over here. So if I draw this out, probably won't see it because of the colors. Let me use the other color I was using. Okay, that doesn't help either. So let's try and get the right color. I believe is that. There you go. So right over here, there's an order block on the H4. So when the price gets in here and touches at equilibrium, let's go to the H1 and see what that looks like. So on the H1, this is the NFP news. So the NFP news specifically took this low over here. So I'm not actually surprised right now if gold even pushes long from today, because it's pulling back with quite a vengeance at the moment. And it wouldn't surprise me if it goes for a long. Now, at the moment, taking it down to the 5 minute, we still have a liquidity void here, the equal lows that the price hasn't actually pressed into yet. So when it does get in there, I'll be pretty interested to see what's going to happen out of it. I do think that gold is still going to go long one more time. Now, there's a few ways this can happen. Because we're in a Monday, gold might be cheeky and say, I'm going to take the low of this day right here and then go for a long. That's one option. The other option is it can just really just dip back where it is, take the equal lows and just start to rally from there. All right. Now, if gold is going to go long, that means that the dollar index movement here needs to be a short. And at the moment, the dollar index is climbing. Okay. So we're going to wait. Now, the next candle on the H4 for this is at 5 o'clock. So between 4 and 5 o'clock, you know, we want to see what's actually going on over here. And we could take it from there and see what the price has done. That's the best thing we can do. All right. So this is my setup that I have, and I want to see what gold is going to do. But it's exciting times because this may actually end up being a pretty strong long on gold. All right. Now, because of the strength of this induction, we might not need to see gold do another move. It might just actually just take off from there. And it looks like it's trying to do something already. All right. So we'll see what happens. I might run gold on here and just see what it gives us. But yeah, ideally, this is my setup on gold. All right. So guys, I hope you enjoyed that. I'll be back on tomorrow, keeping that consistency. No